Hello, welcome to another session of the paper Management of Financial Services. Today in this session we shall cover the Unit 4 of which is included in Block 2, that is merchant banking. And in this unit our coverage will understand the concepts of merchant banking, what are the functions of a merchant banker. We will briefly understand the merchant banking regulations, the parameters of evaluating a merchant banker, and how does a merchant banker manage a public issue, and also we will understand a bit about the book building method of public issue. Now before moving to the functions or the different types of services which are provided by a merchant banker, let us very briefly understand what does actually a merchant banker mean. In the previous sessions, we had discussed that broadly categorizing the market can be classified into a primary market and a secondary market. Now, the merchant bankers as basically are the participants in the primary market. All of you, if you remember, all of you might be knowing that in the primary market, the issue of fresh shares or new shares are issued in the primary market. Any company or any corporation which is in requirement of fund, they will raise their funds by issuing fresh securities in the primary market. So merchant bankers as basically are the participants of these primary market, but it's not only these services which the merchant banker are providing. There are a varied range of services which a merchant banker provides. So as per the dictionary of banking and finance, they explain merchant bank as an organization that underwrites securities for corporations, advises such clients on mergers, and is involved in the ownership of commercial ventures. So this is how they have defined the merchant bank. Now the Securities and Exchange Board of India, SEBI regulations, they define the merchant bankers as any person who is engaged in the business of issue management. This is what we were referring to as issue in the primary market, either by making arrangements regarding selling, buying, or subscribing to securities, or act as manager, consultant, advisor, or rendering corporate advisory services in relation to such issue management. So they are completely involved, such type of merchant bankers, they're completely involved right from the beginning of the issue of the shares till the subscription of the shares and finally transferring the ownership of the shares to the subscribers. So this is how the Security Exchange Board of India have defined the duties of a merchant bank. Excuse me. Now, before going to specific functions of a merchant banker, there are varied range of services. As I said, it can be fee-based or fund-based services. But before that, let us very quickly understand what is the difference between a commercial bank and a merchant banking. The commercial bank, as all of us know, these are basically a financing agency, as merchant banks provide basically financial services. That means in case of a commercial bank, they are accepting deposits, they are providing loans for the different types of activities which are required by the individuals and the corporates, whereas the merchant banker's basically job is to provide the financial services. Now, a merchant banking firm does not undertake commercial banking. So, merchant banker cannot be a commercial banking, cannot undertake the commercial banking activities. Whereas a commercial bank can undertake the activities of a merchant banker. The vice versa can happen. The commercial banks concentrate their activities in accepting deposits and providing short-term finance to the customers. whereas the merchant bankers, they only provide the financial services. Now, there are some banks which are known as development banks. Now, the role of this development bank is to boost the process of economic development by providing long-term and medium-term funds to the industrial sector. Now, these firms, these banks are responsible for the economic development. Let us take the example of the development banks like IDBI, the National Housing Bank, NHB, SIDBI, Exim Bank, Export Import Bank, NABARD, even the Industrial Finance Corporation of India, that is IFCI. These are basically the development banks who provide long-term and medium-term funds to the industrial sectors so that there can be economic development. So they also provide funds. These development banks provides funds at a concessional rate of interest and other incentives to establish the industrial units in the rural and backward regions. So their ultimate objective is to fund, or we can say that for the entrepreneurial development or technology upgradation, these development banks are providing short, medium term or long term loans to the industrial sector. Now, merchant banks, in their own roles, assist in the process by providing services to the clients. Now, development banks will be providing funding to the clients or the industrial sector, whereas merchant banks in this process will help the clients in terms of consulting activities, how they can establish their industrial project or productive venture in a proper way so that they can be successful in their venture for which they have taken loans from the development banks. Some functions of development banks and merchant banks are interrelated and close relationship exists between them. In India, almost all the development banks have established their merchant banking division. That means the development banks will provide funds for establishment of the for the industrial sector, any sort of requirement by the industrial sector, and the merchant banking division will provide the consulting services to the clients. Now, there are also some type of banks which are known as industrial banks. There are commercial banks, there are development banks, there are also few banks which we call as investment banks. There are investment banks like you might have heard the name of Morgan Stanley, JP Morgan, ICICI Securities, Barclays Bank. All these banks are known as the investment banks. Now, the investment banks, their job is to raise funds. They will raise funds by registering and issuing debt or equity and selling it in the market. So it is, they will raise funds by in the primary market, and they will market those securities in the secondary market. That is the job of an investment bank. So generally, investment bank only participated in underwriting and selling securities in large blocks. So investment banks facilitate mergers and acquisition through share sales and provide research and financial consulting to the companies. This is also, in a way, these type of activities are also done by the merchant bankers. Some of the activities that a pure merchant bank is involved in may include issuing letter of credit, transferring funds internationally, trade consulting, and co-investment in projects involving trade or of one form of the or the other. So basically, till here we understood that the job of a merchant banker is not only consulting, as consulting or providing services, but there are some other activities or some other functions of a merchant banker which also includes investment of funds. So that we will be in detail we will be learning now. So the functions of a merchant bankers can be divided into two parts. The first classification of function is a fee-based services, and the second one is fund-based services. Now, in case of a fee-based service, here the merchant banker, for providing some sort of consulting or the services to the clients, they will charge some fees, or we can say the commissions for the services or consulting provided. Whereas in case of a fund-based service, here the merchant bankers are involving themselves by funding to the clients or the corporates. So now elaborately we will be understanding what are the different types of fee-based services, and then we will understand the different types of fund-based services. Now, fee-based services, as I said, here they will be involved, the merchant bankers will be involved in providing services or consulting, and for that they will be getting some fees or commissions. So, project counseling is one of the fee-based services. So in this type of service, the merchant bankers covers all such matters which are related to the project planning, implementation, and control. Like let us assume that a corporate a company is going for expansion, or the company wants to set up a new branch. Maybe it wants to go multinational, wants to settle its new branch abroad. So that is again an entire project. So in that project, the merchant banker, they can hire a merchant banker who can plan the project and who can help the company for implementation and proper implementation and control of what they have desired for to earn from that project. So it starts right from the development of the idea into a project. Now they will help in preparation of the project report. They will guide in estimation of cost, deciding upon the means of finance, how the funding activities will be done for that project, whether they have to go for issuing shares or debentures or bonds, any other instruments which will help in raising finance, and what sort of techno-economic appraisals of projects for the capital issue financing, etc. That is, the entire activities will be consulted by the merchant banker. So right from the preparation of report till the financing aspect. Further, it will also assist in taking various government consents and procedural steps for implementation of the project. Now, when you are setting up, when the company is going to set a branch abroad, then obviously there will be certain legal aspect which is involved. So the merchant banker also would help in getting or on sorting out all those legal concerns, and helps in that and help the company for implementation of the project outside. So these are some sort of project counseling activities for which they will charge a certain amount of fees from the client. The next type of service is known as credit syndication. Now, credit syndication, this we have also discussed earlier. This is also known as a loan syndication. Now, suppose there is a huge amount of money which is involved in the services which is being given to the client. Now, in case of loan syndication, the merchant bankers will provide the service by arranging different banks who will fund the companies. So that means there will be a syndicate of banks, and when all the entire fund is not being funded by one particular bank, but there will be a group of banks who will fund different proportions of the money to the client. So that arrangement is done by the merchant banker. So as it is also known as a loan syndication, and it refers to the service rendered by the merchant bankers for arranging and procuring the rupee and foreign currency loans from more than one financial institution. So whenever it is required, they can borrow from more than one financial institutions. But now that syndicate of banks, that will be identified, that will be negotiated for what proportion of funds will be given by the different banks, that will be done by the merchant banker. Now, merchant banker also arranges for bridge finance and resources for cost escalation or cost overruns. So, this activity involves identification of the sources where from the funds can be arranged. That means what can be the different banks who will be providing or lending funds to the client, approaching these sources. That means they are going and negotiating with the appropriate documents or the supporting documents and complying to all the formalities, and ultimately the loans will be sanctioned and disbursed to the client. So that is the process of credit syndication, or it is also known as loan syndication. Another type of service which will be understanding in detail is the issue management. The one of the primary function of the merchant banker is that they are a player in the primary market or the new issue market. Issue management is linked with the issue of shares or debentures or bond. That means the uh, instruments which are raised, which are issued in the primary market for raising funds. So now corporate securities like equity shares, preference shares, debentures, bonds are issued in the primary market, and the company can raise funds by the issue of these shares. So now these merchant bankers, they guide, they advise, they act as consultant, or they provide specific services for these corporates in order to raise funds in this new issue market. It involves marketing of capital issues of existing companies, including right issue and dilution of share by letter of credit. So entire thing, like how it will be advertised, what should be the mode of issue, whether it will be a public issue, whether it will be a right issue, whether it will be a outright sale. So what should be the mode of issue, what should be the timing of the issue, everything is being managed by the merchant banker. So that consulting services is being provided to the corporate. Now public issue are managed by the involvement of various agencies. So merchant bankers is responsible to identify the various agencies which will be involved during the issue management, issuing of the financial securities in the new issue market while raising funds. So the agencies are, there can be underwriters, there are brokers, bankers, advertising agencies, printers, auditors, legal advisors, registrar to the issue, and merchant bankers providing specialized services to make the issue a success. So the entire, all these agencies are being identified by the merchant bankers during the issue management. However, merchant bank is the agency at the apex level that plans, coordinates and control the entire issue activity and directs different agencies to the successful marketing of the securities. So it is not that they only appoint all these agencies, may it be the underwriters or brokers or bankers. It is also they coordinate and control their activities during the entire process of issue management. Ultimately, the fundraising activity can be successfully accomplished by that corporate. So the entire right from the issue till the allocation of the shares to the owner, the entire part is being controlled and coordinated by the merchant banker. The next type of fee-based function of a merchant banker is corporate counseling. Now here, this type of service aims to advise the business firm to run their units effectively at maximum potential through effective management. Now suppose a firm is having some issues in management or effective handling of their projects, or maybe in earning the desired amount of profits, they can involve an expert merchant banker who can help in corporate counseling. There is a wide field of corporate counseling which could be any matter worth the benefit of the corporate unit, like the financial aspects, the government regulations, restructuring of aligning units. There may be policy changes matter, management of public issues and underwriting environmental reshuffles, etc. So any type of activities or matters related to the firm which they are facing any issue, they can hire a merchant banker who on commission basis they can be involved in sorting some the type of issues which are faced by the clients or the industrial unit. It also covers other fields like economics, managerial economics, investments and financial management, corporate laws and other related aspects, expenditure control, pricing methods, marketing strategy, etc. That means completely they have professionals who will guide the firm in getting their desired output out of their productive ventures. So this is what is the purview of a corporate counselor. The next type of fee-based service is a portfolio management. So all of you might be knowing what is a portfolio. Yes, portfolio, we can say these are different types of securities which are bunched in a particular bundle, and where investors invest so that their main objective is to maximize their returns and minimize their risk. Now portfolio, these merchant bankers, they have experts who can also guide the investors in terms of portfolio management. That means they can help or advise in creating portfolios so that portfolios can have proportion of shares, debentures, bonds. There can be also some debt securities in the portfolios. So how, what sort of portfolios of investor can create as per the adequate amount of funds available with them, so that the investor can maximize their return and minimize their risk. So this consulting or the services are being provided to the investors by the merchant bankers. Next type of service is known as joint venture abroad. Depending on economic and political conditions, many countries may permit joint ventures by local businessmen abroad. So, suppose the few companies in India, they want to go for a joint ventures with other companies abroad. So that type of service, whether there can be some legal issues, there can be some technological issues, or whether the project joint venture will be actually beneficial or not, where they have to do a viability study of the project. So that consulting also is done by the merchant banker. So they will facilitate meeting with the foreign partner, get sanctions under various provisions. They make techno-economic survey for the viability of the project abroad. They also help in providing legal documentation under local as well as foreign legal provisions. Another type of fee-based function is the debenture trusteeship. Now, debenture, as you all know, it is a debt security. Now the merchant banker also can get themselves registered and act as a trustee of the debentures issued. Now these trustees, what is their role? The role of a trustee is to protect the interest of debenture holders as per the terms laid down in the trust deed. So before subscribing to the debentures, there will be all the norms and conditions will be mentioned. So now the trustee's job is to safeguard the interest of the debenture holders, so they can undertake, when it is a new company, there is always a risk that the public might not subscribe to the shares. So here what happens, the company can negotiate with the merchant bankers for bought out deals. That means there will be a bid and ask price, which is the corporate client as well as the company, which is a newly established company. So the company will sell the shares to the merchant banker with a price which is negotiated, and simultaneously there will be a ask price which is higher than the bid price. Ask price is the selling price. So later on the merchant banker can sell those shares in the sell those shares at the ask price. That is the process of a bought out deal. So when a promoter or the company which I was telling, it may be a newly established company. So when a promoter envisages that if public issue made to raise capital will not clinch, may approach a merchant banker and place the shares of the company initially with him. So merchant banker is buying the share initially, which are offered to the public at a later stage. Now, after certain point of time, the merchant banker is offering the shares to the public at a ask rate, which is predetermined earlier, and this entire process is known as bought out deal. Many a time, a syndicate of merchant bankers jointly sponsor a bought out deal to spread the risk involved. So sometimes it happens that one merchant banker may be, it may not uh, be willing to take the entire risk which is involved in a new promoter. So there can be a group of merchant bankers who can jointly sponsor a bought out deal. Another type of fund-based function is the leasing and hire purchasing function. So depending on the funds available, merchant bankers also can enter into the field of leasing and hire purchasing, lease financing or hire purchase financing. So in case of lease, it is an agreement whereby a leaser conveys to the leasee in return of a rent the right to use an asset for an agreed period of time. So here the lessor will be the merchant banker and the lessee will be the user or the client. On the other hand, in case of hire purchase, the user at the end of the agreed period has an option to purchase the asset which he has used till date. So in case of a hire purchase, at the end, the client will be given an option. If he wants, he can purchase the asset which he has used till date. So the merchant bankers can advise the client whether they should go for leasing or they should go for hire purchasing system of financing an asset. So these are in brief certain types of fee based on fund based functions. Underwriting is another type of fund based functions. Underwriting is, as we were discussing just now, suppose the public issue which has been done by any company which is not being subscribed by the general public. So here the merchant banker can also play the role of an underwriter, so that they can subscribe to the shares which have not been subscribed by the general public. That means there is a guarantee by the merchant banker that they will be underwriting those shares which has not been subscribed by the public during the issue. So underwriting of shares is a very important aspect during the public issue management. So underwriting also, it can be done by a syndicate of banks also, or merchant banker themselves can go for underwriting activities. Now let us move on to the regulations of merchant banking activities. SEBI came out in December 1992 with Securities and Exchange Board of India Regulations 1992, a comprehensive enactment to regulate the merchant banking activities. While issuing these regulations, it was emphasized that such enactment will make primary market more disciplined. So most the emphasis of this merchant banking activities right from the beginning was on regulating the new issue market or the primary market. Later on, a different gamut of functions were added to the activities of merchant bankers. So these regulations define merchant banker as any person who is engaged in the business of issue management, either by making arrangements regarding selling, buying, or subscribing to securities, or acting as manager, consultant advisor, or rendering corporate advisory service in relation to such issue management. So initially it started with only being participant in the primary market or during the issue of the new shares in the new issue market. Now, merchant banking activities can be categorized as authorized or and non-authorized activities as per the regulation. So, the merchant bankers are required to get themselves registered under regulations only for authorized activities, not for the non-authorized activities. And the authorized activities are to carry out any activity of the issue management which consists of preparation of prospectus and other information relating to the issue, determining financial structure, tie-ups with financiers, and final allotment and refund of the subscriptions. This is all these things are related to the issue management. Another authorized activity is to act as advisor, consultant, manager, underwriter, portfolio manager. Another angle from which authorized activities can be identified is the activity specified by SEBI for each categories of merchant banker. Now SEBI has demarcated the activities by classifying the merchant bankers into four basic categories. Now, what are these categories? The first category is these merchant bankers can carry on any activity of the issue management which will inter alia consist of preparation of the prospectus and other information relating to the issue, determining financial structure, tie-ups for financiers and financial and the final allotment and refund of the subscription. That means right from preparing the prospectus brochure of the issue till what should be the proportion of the different types of securities. Suppose you are issuing equity share, what should be the proportion of equity share, debentures, bonds for raising funds, and till the final allotment to the persons who have already subscribed. And suppose the subscriptions are they have that as some persons will be there to whom the allotment might not have been made, so now refund of money or has to be done to them. So the entire process is involved in the category 1 of the merchant banker. They can also act as advisor, consultant, manager, underwriter, and a portfolio manager. Now category 2 can be merchant bankers who can act as advisor, consultant, co-manager, underwriter, and portfolio manager. That means they cannot undertake issue management of their own. Whereas category 1 person, they can take all the decisions related to the issue management. Now category 3, these are merchant bankers who can neither undertake issue management nor act as co-manager. They cannot conduct business of portfolio management. Thus, the area of their operation restricts to act as underwriter, advisor, and consultant to the issue. They can also only act as advisor and consultant as well as underwriter. Category 4, such merchant bankers do not undertake any activities requiring funds. They can only act as advisor or consultant. So category 3, somewhat there can be some sort of funding activities because they can act as underwriter. But category 4, it is purely services or advisor or consulting activity which they can be involved in. So these are the four categories of merchant bank activities. Now, merchant bank has to get itself registered. Only those merchant bankers who are specified in category 1 can be registered under SEBI merchant banking regulation. Application is to be submitted in a pre-prescribed format which is given by SEBI. Now, to get a registration and a certificate to operate as a merchant banker, these agencies, merchant banking agency, they have to fulfill two broad criteria. One is operational capabilities. Other one is that they should have certain capital adequacy, which is fixed by the SEBI. Now, operational capabilities are the applicant shall be a body corporate other than a NBFC as defined by RBI. The applicant is to have the necessary infrastructure like adequate office space, equipments, and manpower to effectively discharge his duties. The applicant should have at least two persons who have the experience to conduct the business of the merchant banker in the entire group. 2% to experienced persons as a merchant banker has to be there. A person directly or indirectly connected with the applicant has not been already granted registration. As on date, when they are applying for registration, none of the person in the group should have already been granted registration. The applicant or his partner or director should be a man of integrity. Of course, this is very much required. They should not at any time be convicted for any offense involving moral turpitude or has been found guilty of any economic offense. The applicant is to have professional qualification from any recognized institution, and the applicant is a fit and proper person as per the criteria specified by SEBI regulation. The criteria, as we have already discussed, criteria 1. So those persons who are coming under the purview of criteria 1 can get the opportunity of registering themselves as merchant banker with the SEBI. Now, next norm is of the adequate amount of capital requirement. So, SEBI desires that the applicants of merchant bankers should have adequate capital with them. So, the net worth, which means the value of capital contributed to the business plus their reserves, free reserves. So, at the time of registration, a non-refundable application fee of rupees 50,000 has to be paid to SEBI. Net worth of at least rupees 5 crore is to be maintained for the life of the registration. To get the certificate finally granted, the registered merchant banks are to submit required fees of rupees 20 lakhs. That has to be submitted to SEBI. Registration is granted for 5 years at one time. Only those applicants who qualify on all these criteria are granted the registration. So these are in short, the operational qualifications as well as the capital adequacy which are required for an applicant who is applying as merchant banker with the SEBI. Now, control of SEBI. SEBI controls the merchant banking activities. Every merchant banker shall submit to the board complete particulars of any transactions for acquisition of securities of any corporate body. Those who issue is being managed by that merchant banker within 15 days from the date of entering into such transaction. So after entering into a transaction of new issue, they have to submit the details of the transaction within 15 days to SEBI. The merchant bankers that submit a half-yearly report for the period ending 31st March and 30th September of every year in a prescribed format within 3 months from the close of the period to which it corresponds. So half-yearly they have to submit a report with SEBI. Every merchant banker shall appoint a compliance officer who shall be responsible for monitoring the compliance of the Act, rules and regulations, notifications, guidelines, instructions, etc. issued by the board or the central government and for the redressal of investors' grievances. So all these are within the control of the SEBI. So they have to comply with these activities in order to continue with the services of merchant banking activities. Now, as we discuss the major function of a merchant banker is during the public issue. So when it is a public issue, a company is raising funds by issuing the securities. It may be equity or debt securities in the new issue market. So fresh shares or fresh securities are issued in the new issue market. So merchant bankers play a major role during this public issue. They manage this entire public issue. So merchant banker can assist in project selection, preparation of project reports, feasibility reports, appraise the project. They may assist in designing the capital structure and propose the debt equity mix. They can propose the debt equity mix means, as I said, like when they are going to raise funds from the primary market or the new issue market, so the merchant banker will be competent enough to advise the firm what proportion of the debt securities, that means debenture or bonds, they should issue in order to raise funds, and what proportion of the shares, it may be equity shares or preference shares, they should issue in order to raise funds. So what should be the proportion of the debt and equity or the capital structure? What capital structure should be designed so that ultimately the cost of capital of a company can be reduced? So that consulting or services, that is being provided by the merchant banker. Any company making a public issue has to appoint a merchant banker who act as a lead manager. So now a lead manager role is, we can say, the lead manager is right from the day one, he is there till the allocation and the transfer of ownership of the shares to the ultimate individuals. So in the entire process, the lead manager play an important role. So the merchant banker who is in category 1 can play the role of a lead manager. So company can involve a lead manager to manage the entire issue. So first the company appoints a lead manager. Now the lead manager provides valuable service in preparation and drafting the prospectus, pricing of the issue, marketing and underwriting the issue, coordinating the activities or different agencies, institutions involved in this context to carry out legalities involved in the process, deciding the basis of allotment, making the allotment, dispatch of share certificate, refund orders as the case may be, and finally in listing the shares on the stock exchanges. Now, there is a process initially when the shares, fresh new shares are issued in the primary market. Let us assume 10,000 shares are issued in the primary market. Now, after the issue is over, after the subscription is done, after the allotment is done, then those shares are again traded in the stock market. So now in that, during that issue, the shares which has been offered in the new issue market, that has to be listed in the stock exchanges. So that also has to be done by the help of a lead manager who is a merchant banker. Now there are some activities which a merchant bankers does before the issue and some activities which has to be done after the issue. Now some of the activities which are known as pre-issue activities are the appointment of lead manager, as we were discussing just now. So merchant banker has to enter into a MOU, memorandum of understanding, with the company which is making the issue, that means the corporate or the client. So they have to undergo a MOU, and in that MOU, what are the obligations or what are the activities which is to be done by the lead manager will be mentioned, so that they will be clear about the activities which they have to undergo during the entire issue. Now they will, before that issue, the lead manager, they will prepare the prospectus, that means brochure, where the entire details about the issue will be mentioned, which is given to the individuals, investors or the brokers who are involved in the issue. So prospectus detailing the entire issue type, what should be the pricing of the issue, what should be the mode of issue, what should be the timing of issue, who can subscribe to the shares, everything will be mentioned in the prospectus. Pricing of the issue. Now pricing of the issue, whether the price will be a fixed price will be mentioned in the prospectus, or whether they are going for a method of book building. So any type of issue that will be decided by the lead manager or the merchant banker, which will be appropriate for the client. Submission of draft offer documents. Now the lead managers had filed 3 copies of the draft offer document. That means all those which they have decided to be done during the issue. So there will be proposal of that issue. 3 copies has to be submitted with the board, with SEBI, along with the specified fees. He shall also file a draft of a document with the stock exchange where the specified securities are proposed to be listed. So it is not only SEBI, it has also to be given to, the document has to be given with the stock exchange, so that ultimately after the issue in the new issue market, it will be listed in the stock market. Now, before the issuing of the shares in the new issue market, the merchant banker or the lead manager has to get permission for the issue in the new issue market from the stock exchange, because finally it has to be traded. These shares which are issued in the new issue market, that those shares has to be traded in the stock exchange after the complete issue is over. Now, to manage the entire issue management in the new issue market, the merchant banker has to appoint certain different other agencies. So one such agency is the registrar, which is a kingpin of the entire issue or plays a vital role. The registrar of the issue, which are also known as the issue house, are responsible for receiving share applications. So they will collect the share applications from different investors or from different collection centers through the controlling branches of bankers to the issue. So there will be certain bankers which will act as the, you can say, the place where the collection of the shares will be done. Now the registrar will receive those applications, they will analyze those application, and they will recommend the basis of allotment to the regional stock exchange for its approval, arranging, and then finally after that they will arrange the dispatch of this allotment letters and preparing the registrar of members, etc. So the registrar will be are those persons, or is that activity of a merchant banker who will be involved in the back office activities for analyzing the entire issue and ultimately dispatching those allotment letters to the individuals who have subscribed the shares. Now, lead managers also will appoint certain bankers to the issue. Now, who are those bankers? Bankers, they can be also underwriters, or bankers can be those certain banks who will collect, or who are, you can say, the over the counters where the collection of the shares, the subscription will be done. The shares or securities, the individuals will go to that particular bank where they can subscribe to the shares, bonds, or debentures. So there will be certain bankers who will be associated with this issue, the entire issue process. There will be also brokers who will be associated to the issues. Now, what is the role of brokers? Brokers will also be sent the prospectus. Now, these are people who actually bring the prospective investors and the issuer of the company together. So, broker is a place, broking house is a place where different investors come. So, they will, the brokers will advertise or market through the prospectus which they might have received. So, they will be responsible for bringing the prospective subscriber to the issue. So, underwriters of the issue again will be prepared by the, or sorted out by the merchant bankers. So underwriters are those banks, or they are those merchant banks who are registered under SEBI and who can subscribe to the securities when it is not being subscribed by the public or the subscribers. Now, the merchant bankers also oversees the entire advertising part of the issue. That means how they will be advertised. Maybe it will be advertised in the newspapers, or suppose it will be advertised in televisions, or suppose they have to be advertised or marketed through the brokers. So the entire thing has to be finalized by the merchant bankers. They have to also finalize the printers to the issue. They will print the prospectus and all the other printing aspects. They will also take the consent of the board of directors before the issue is done in the new issue market. Then they have to also submit a due diligence certificate. Now, a due diligence certificate is a form which is prescribed by SEBI. Now, they have to fill that due diligence certificate, in which they are certifying, the merchant banker is certifying that all the documents and information and material relevant to this issue process has been examined, and this certificate has to be submitted to SEBI at least 2 weeks prior to the opening of the issue. Then there are certain other pre-issue activities like printing of the prospectus, like interaction with the depository, where the e-format of these share certificates will be kept before it is being dispatched to the owners. Now, how it will be launched during the public issue, whether it has to be launched in the through advertisement in the newspaper or in the television, and what should be the timing of issue, whether if it is a bullish market, whether this is the appropriate time for issuing the new issue in the new issue market or the primary market or not. So all this decision has to be made before the issue by the merchant banker. Similarly, in the post issue also, the merchant banker is responsible to analyze the collected forms or subscription forms. Then after that, the collecting banks will collect the subscription forms, analyze it, then allot. Finally, it will be allotted to the individuals who have subscribed for those securities, and finally it will be discharged. It will be dispatched to uh, the investors who have already invested in the securities. But there will be certain issues where the subscription will not be given or allotment would have not been made to certain individuals. So in that case, some amount of money also will be refunded to those individuals who have subscribed. So in that case also, the money will be refunded. So entire loop is closed after the process of allotment, dispatch and refund of money to the individuals. Another method of issuing or giving a public issue is a book building method. As we discussed that when it is in a new market, a new issue is done for raising funds. Two basic methods are there. One is a fixed rate method where the individual knows that yes, the share price is 112 rupees, so I have to subscribe the share at 112 rupees. But now in case of a book building method, here the price is not fixed. A range of price is given, a price band is given, within which the individuals has to subscribe. Then after the collection of the different of the securities by the subscriber, finally the merchant banker then analyzes the securities and then finally fixes the price of the issue. So that is what is a book building method. So in a book building is a process used for making a public offer of equity shares of a company. Book building is called so because it refers to the collection of bids from investors which is based on an indicative price range. Now suppose there will be a price band of, let us say, 205 to 210. So within that price band, the individuals will start subscribing to the shares. The issue price is fixed after the bid closing date. Now there will be a date, suppose 2205 to 2010, 210. So there, suppose 30th of April is the last closing date. Now after 30th of April, the issues will be analyzed. The subscriptions will be analyzed, and finally a rate will be fixed after the closing date. Now the issuer company engages a lead manager, here the merchant banker, to act as a book runner who prepares and obtains a green signal for the draft of offer document to SEBI. Here also the process, the entire process is same as we had understood in the pre-issue activity and post-issue activity. Only thing is that in the prospectus, here in case of a fixed price, the price band will be mentioned, and after that they will go for closing the price. But for that also, for the price band also, they have to get prior approval from SEBI before floating the issue in the market. So this is in brief the functions of a merchant banker. So in the next class, in Unit 5, we will discuss in detail about the broking and trading. Thank you.